Welcome to my channel Accounts Accuracy, and let us discuss the first specimen paper of board's ISC Semester 1 examination. The first question is, pick the odd one out from the following. The options are interest allowed on loan taken by the firm from the partner. Second is rent due to a partner of the firm for using his premises for business purposes. And the third one is salary due to the manager of the firm. Fourth is salary due to a partner of the firm. Here you can see the first 3 points are the charges to the profit and loss account, whereas the fourth one is appropriation to profit and loss account. Hence, the fourth one is only the odd one out. Next is, if the operating cycle cannot be identified, it is assumed to be 18 months, 12 months, 10 months, 15 months. The correct option is 12 months. Obviously, the operating cycle consists of 12 months as the accounting period. The third question is, which of the following is not shown in the current liability of balance sheet of the company prepared as per Schedule 3 of Companies Act 2013? Here the correct answer is deferred tax liabilities, because trade payables, short-term borrowings and short-term provision, all these three are the current liabilities, whereas deferred tax liability doesn't come under the category of current liability. The fourth question is, interest on calls in arrear account is closed by which of the following statement? The first is crediting the statement of profit and loss account, crediting it to PL appropriation account, debiting to PL appropriation account, or debiting to statement of profit and loss account. You know that calls in arrear is basically loss to the company. So losses should be debited, but interest on calls in arrear is basically credited, because all interest and gains we credit as per the nominal account rule, and hence as it is credited and we are going to close it, so it must be debited. So if it will be debited, then obviously statement to of PL account will be credited. So the correct option is A. Now, question number 5. The question number 5 says the formula for valuing goodwill under capitalization of super profit method is. You have to find the correct option. For this, you need to learn the formula, and I know by now each of you might have learned the formula. And as per the formula, calculation of capitalization of super profit method is super profit divided by normal rate of return, that is NRR. Now the next question is, Ronaldo Limited forfeited 300 equity shares of rupees 10 each, fully called up, on which rupees 5 per share including premium of rupees 1 per share was received. It later reissued these shares at a discount. As you know, although rupees 5 has been received by the company, but as rupees 1 was premium, so the forfeited value will only be the nominal value of the application money, and that is rupees 4, because 1 rupee is the securities premium reserve and this value is not included. Hence rupees 4 can only be utilized as a discount for reissuing the shares again, and as rupees 4 is the forfeiture of the share, hence rupees 4 is the correct answer. Now question number 7 is, Veena and Soma are the partners in a firm. They admit Sarah for 1/4 share in the profit of the firm. Sarah acquired her share as 1/12 from Veena and the remaining from Soma. So here the options are 11 is to 12, 1 is to 1, 1 is to 2 and 1 is to 11. Now here what you can see, it's been given that 1/4 share has been taken away by Sarah, and out of which Sarah has taken 1/12 from Veena. So that is clear that 1/12 is the sacrificing ratio of Veena. And when you are deducting from 1 by 4, 1 by 12, you will be getting 2 by 12. So this remaining has been taken from Soma. So that is why the ratio is 1 is to 2. That means 1 by 12 from Veena and 2 by 12 from Soma. So that is very simple. The ratio is 1 is to 2. Here the correct option is 1 is to 2. The next one is Arif, Ravi, when are the three partners in the firm sharing profit and losses in the ratio 6 is to 4 is to 1. Arif guaranteed a minimum profit of 16,000 to Ben. The trading profit of the firm for the year ending 31st March 2021 was 1,32,000. Now, the correct option for finding out the share of profit of Arif's share of profit of the firm will be 68,000, and this can be calculated by just multiplying the profit value, that is 1,32,000, with 6 by 11. 6 by 11 is, that is 6 plus 4 plus 1 makes 11. So Arif's share is 6 by 11. So when you will multiply 6 by 11 with 1,32,000, your answer would come 72,000. Now if 72,000 is the value, but 4,000 you need to deduct, because 4,000 is the deficiency which will be on behalf of Ben, because Ben was supposed to get 16,000 Ben from Arif. So Arif is supposed to provide 4,000 to Ben in order to provide him the guaranteed value of minimum profit. His share of 1 by 11, he is only getting 12,000 here. So that is why rest 4,000 he will be getting from Arif. So correct answer is 68,000. Now question number 9 is, Simi, Manu, Veena are the partners in the firm sharing profit and losses in the ratio 2 is to 2 is to 1. The balances of their fixed capital account is on 1st April, where Simi 1 lakh, Manu 1 lakh and Veena 80,000. After the accounts for the year ended 31st March 2021 were prepared, it was discovered that interest on capital at the rate of 10% per annum had been credited to partners' current account, even though it was not provided in the partnership deed. Now here partner's current account is mentioned. So that is why it is very clear that here the fluctuating capital account is being maintained. Hence the error in Simi's capital account will be credited her current account with 1200. Now, as you can see here, the total interest on capital of Simi, Manu and Veena will be 10,000, that is 10% of 1 lakh. Again, 10% of 1 lakh 10,000 and 10% of 80,000 is 8,000. So, these three will be added, which is coming 28,000. So, this is the total interest on capital of all the three partners. As this 28,000 total amount has become divisible profit because it was wrongly credited to their accounts. So, this 28,000 is the divisible profit, and out of this 28,000 Shimi is supposed to get 11,200, but Shimi is only getting 10,000 as interest on capital. So extra 1,200 needs to be credited to her account, and it is very clear that as it's a fluctuating capital account, so this 1,200 will be credited to current account, not capital account. Now question number 10. Runa, Ria were partners in the firm sharing profit and losses in the ratio 3 to 1. On the 1st April 2020, Uday is admitted as a new partner in the firm for 3/8 share in the profit on various terms, one of them being his contribution of 42,000 as a capital. The new profit sharing ratio among all the partners to be 3 is to 2 is to 3. The capitals of Runa, Ria After taking into account all the terms of admission were 61,625,375. It is decided that capital account of Runa and Ria be adjusted in the ratio of their respective share in the profit after admission. Any surplus to be adjusted through the current account while any deficiency through the cash account. Here what we are noticing, we need to find out the total capital of the new firm after the admission of Uday. As Uday is being admitted for 3/8 share for 42,000 of capital, so the new firm's capital would be based on his capital and his share is 1,12,000 because his share of capital is 42,000 and his share of profit is 3 by 8. So reciprocal of 3 by 8 is 8 by 3. So 42,000 into 8 by 3 is the total capital of the firm. This is what the new firm's capital. Again, the share of Runa's capital based on this new share is 3 by 8. That is 3 is to 2 is to 3 is the new ratio and Runa's share is 3 by 8. So 3 by 8 of the total new firm's capital is 42,000. 3 by 8 into 1,12,000 is 42,000. Now as Runa's new capital is 42,000 but her old capital is 61,625, so the difference between 61,625 and the new capital 42,000 is 19,625. This needs to be credited to Runa's capital account. The correct option is Runa's credit capital balance of 19,625. This much for today. For rest, please do watch my next video for discussion of next 10 questions. Thanks for watching and please don't forget to subscribe my channel and hit the big fat like button.